In this session of Corporate Legal Framework, you're going to see about divisible profits and dividends with me, Saranya. So, shall we begin? Cool, let's go ahead. So, first of all, what is this divisible profit? Now, the profit that are available for distribution among the shareholders of a company as dividend are called as divisible profits. Now, these profits are calculated by comparing the income and the expense of the year. Necessary adjustments are made before calculating the profit of a business concern. So now, with all the accounting principles followed and all the directors having the right to create provision, reserves, and fund out of profit, these divisible profits are the remaining profit which may not be used in full dividend and can be shared to all the shareholders in order for their all the type of skills they have put in or for their investment that they have shared or all the time which they have invested for the growth of company. Now, everything which we say has certain principle under which it works. Similar way, divisible profit also follows a set of important principle in order to function in its best way. So let us see one by one of those important principles under which this divisible profits work. Number one, according to the company's rules. The articles of associations are the rules of the company. All the directors are totally entitled to distribute the profit under these laws. They also follow the company's rule which is laid in common for all the people who are there so that the dividend can be paid out of the revenue profit. Now, all of them are supposed to follow the court cases. While calculating the divisible profit, the court cases must totally be kept in mind. The auditors must also know the decisions of the court announced time to time so as to maintain the proper strategy and to maintain proper records of the divisible profits which are shared. Now, profit not out of capital. This is one of the major points to be considered because any capital which is regained cannot be used to pay the dividend. The revenue of the profit should totally be outside the capital which was put in. This is the only thing which can be used to pay as indivisible profit and not the capital itself. Approval of the shareholders. In the annual general meeting, shareholders may all approve the rate of profit which is recommended by the directors so that every shareholder of the company is totally happy with what is happening over there. This will make sure that there are no internal rivalries which are arising from there. So, the divisible profit can be used to pay the dividend only after approval of all the shareholders. Right of proposal. The directors can propose the rate of dividend out of the divisible profit. Now, after completing all the legal formalities, the directors can decide the dividend. In case if there are any rivalries or if there are any cases which is arising as opposition, the director must consider the opposition and then again renegotiate the dividend percentage and then again let it out for the approval of the shareholders. Undistributed profit. It is a right of the director to use such profit for the payment of dividend at the end of the year. Now, this is called as the revenue of the provisional year. Distribution. Before declaring revenue profits, the depreciation of assets must be first charged. Especially in a manufacturing company, it is very compulsory to charge depreciation before the declaration of profit. This is because every machinery which is bought in also comes under the capital investment. And as the quality of the machineries or as the net worth of the machinery degrades, there comes an arising need to invest the capital again in order to purchase machineries. This is calculated every year as in depreciation so that at the stage when there is a must to actually replace the product, there isn't any rivalries, and from the capital investment, the new machineries can be purchased. And finally, secret reserves. If according the Articles Association, it is allowed to create and use such reserves, and then these can be used for the payment of dividends. Now we can ask, what are the secret reserves? All the directors of the company can maintain a secret account. This will have a percentage of the revenue which is generated and which will be stored or can be saved over there. It can also be another investment. And what will be done in cases where there are less profit or sometimes where there is a need for higher capital, these secret reserves can be totally utilized. Now, how does these dividends work? Because every time when there are something which is coming, there are certain steps to take care of in order to maintain certain dividends. Now, interim dividend. Now, once the dividend has been declared in the said board meeting, the company must distribute the same with 30 days of declaration. So, how does it work? The results can be decided on the basis of provisional results of the year after due consideration from the board. And then, transfer of requisite amount needs to be made to the general reserve. A special bank account needs to be opened within 5 days of such a board meeting, where an amount equal to the interim shall be deposited. Once the dividend has been declared in the said board meeting, the company must distribute the same within 30 days of declaration. The company is liable to pay dividend distribution tax, which is at 16.225% plus 15% plus 5% and plus 3% education fees, and this tax on distributed profit shall be paid within 14 days from the date of declaration. Confirm the interim dividend. So, declaration in the next annual general meeting by declaring the final dividend rate. Now, how can this final dividend be solved? Now, again, the board of directors has the right to recommend the rate of dividend, right? So, after recommending the rate of dividend, shareholders must approve it. Only then the dividend can be issued. So, this transfer of requisite amount needs to be made to general reserve as discussed already. Now, again, a special bank account needs to be opened within 5 days, and then once the AGM, wherein the amount equal to the dividend shall be deposited, is done, the dividends one declared in the annual general meeting is paid again within the 30 days of declaration. Here again, after paying all the taxes which was mentioned earlier, within 14 days from the date of declaration, the entire dividend is paid to all the shareholders. The next time, if you think you're going to be the shareholder of any one particular company, or you're going to be the board of directors, ask yourself, will you satisfy all these needs before you actually clear it up? This is how the legal framework works. So if you are against anything or if you're not following such stuff, it can lead to serious troubles. So with this session has come to an end. So in case if you have some feedbacks, do let me know. Thank you.